Hello, everyone. My name is Jesse Day. I'm the host of Commodity Culture, a YouTube channel and podcast that covers investing in commodities and natural resources. Today, we're going to be talking specifically about uranium, one of my favorite topics, and uranium stocks, namely how to make a boatload of money in uranium and hold on to it as well. So now I'll welcome our panelists for today. We have Mr. Rick Rule, Fabi Lara, and Nick Hodge. Please come up to the podium. So all of our panelists today, very experienced in the uranium industry with a very long track record. So my goal today is to pick their brain and get as much useful, actionable information for you guys that we can. But to start things off, I will allow all the panelists to give a brief introduction and maybe give us a little bit of history in terms of your investment in uranium. We'll start with Fabi Lara.
Thank you. I guess ladies first, and I'll take advantage of that. I am first and foremost just a private investor, like most of you here, and I came early to the party, which means that it was very lonely and I was very wrong for quite a long time. I heard this gentleman here speak about uranium back in 2014, bought into the whole idea, but I've actually made quite a bit of positive return from it. I really like developing stories or developers that have a resource, and yeah, I've made some crazy bets, and most of them have thankfully paid out. Still very much invested. I did not plan for this, but I have most of my portfolio, and when I say most, I mean 90% plus in uranium currently. I still think there's quite a bit of room to run, so that's me.
I'm Rick Rule. I guess I'd describe myself, among other things, as a uranium beneficiary. I became fascinated with the sector while at the University of British Columbia. I think that was 1972. So I've been involved, for better or for worse, for a very, very long time. I had the extraordinary good fortune of seeing the 2000 to 2006 or 2007 market early. Like my friend, way too early. So I was wrong for a long time before I was right. But then I was pretty dramatically right. Uranium pays a lot of rent when it pays rent. And at age 70, I'm looking forward to at least one more bull market like that one.
Happy birthday, Rick.
Thank you.
Nick Hodge. I own two companies. One's called Resource Stock Digest. That takes company fees to sponsor the website. They have featured pages, and we do interviews about them, including uranium companies. And then I own a company called Digest Publishing that has a series of paid newsletters that run the gamut all the way from monthly macro and positioning to private placements that accredited investors can participate in alongside me and my network. I came into uranium very, very early, I think around the 2013, 2012 timeframe when Arrow was being discovered, when the Triple R deposit was being discovered, started touring properties, and just became familiar with the space. An expert by no means, but a generalist that has gravitated toward that sector and continued to hold equities across the spectrum of the uranium space and continued to be interested in it and invest in it and recommend companies in it.
And we also have Warren Irwin here. If you could please give us a brief introduction and a little bit about your history with investing in uranium.
I'm Warren Irwin. I'm the President and Chief Investment Officer of Rosso Asset Management. My first foray into uranium was the last cycle, where I owned quite a number of juniors. I've owned a number of juniors that went to zero, so that's a cautionary tale for everybody. But I also own a big chunk of extract uranium we sold to the Chinese.
That's great. Perfect introduction. So the first question I want to ask, we're going to skip the fundamentals, we're going to skip the macro, and we're going to get straight to the point. And that is, where are we right now, in your opinion, in this uranium bull cycle? Because as you've all mentioned, you got in much earlier than maybe a lot of people here today. So the question is there still lucrative returns to be made for somebody entering the space right now, or has the big money being made? And maybe we'll start with you there, Warren.
Thanks for that. Where I believe we are in the uranium cycle right now, I've been following it for the last 7 years. I can have a lot of views on it, but I do believe right now that there's a lot of hype going towards the sector. A lot of people want to make the uranium cycle go. I'm on a fundamental basis. I don't share their views because demand, you just can't build nuclear reactors overnight. So the growth rate in demand won't be there, and I just see tons and tons of projects that'll be coming to market without much higher prices in uranium, even number of projects coming to market where we are today. So I think right now we're in the wishful thinking stage where everybody wants the uranium market to run. The whole mining sector is turning here, and there's a lot of people all hyped up about uranium, and I don't share that enthusiasm.
Excellent. Well, it's good to have a bit of a bearish view on the panel as well. Nick, in your opinion, where are we right now in this uranium bull cycle, and are there attractive opportunities that are presenting themselves for newer investors?
Yeah, I think we're early in the cycle still. I mean, you had a good run there. You know, baseball parlance, you can say it's the third inning or something like that. It wasn't too long ago since we had a panel like this. I think they had the last VRIC in May, so it's only been 6 or 7 months. And we were talking then about how that first 3 innings were sort of consolidating, right? We had a nice run, and they were coming down to consolidate in the back half of 2022. You know, the price of uranium still hasn't gone where it needs to go to incent new supply to come online. There's still a sea change happening with global sentiment as it relates to environmentalism and decarbonization. And I do think there's money to be made. I couldn't necessarily look in my crystal ball and tell you what the time frame is, but I think there's a long road to go to fill the supply gap that is going to emerge in the coming years. And I think nuclear will continue to be turned to in a big way for the global decarbonization and green push. And I think there's some, factors that are starting to emerge that are different than what we were talking about for the past 5 years. It's no longer is Japan going to restart or is Germany going to keep the reactors online. It's bigger things like can Kazatomprom really produce? How much demand is going to come from small modular reactors, which are now being approved? And so there's a lot of positive sentiment in the space, and I think there's still a lot of money to be made.
Great. And Rick, would you care to add anything to that?
Sure. I think one of the interesting things about the uranium industry is a sort of hyperbolic nature of the description of this workshop, how to make a boatload of uranium, money in uranium. I mean, there is a lot of hyperbole around a sector that generated the same returns that this sector generated in the last cycle that Warren referred to. And so I'm going to differentiate between the uranium market and the uranium share market. I don't agree with Warren's thesis on the market. I believe that the total cost to produce a pound of uranium, including cost of capital, prior year write-downs, and social rents, is above the current cost of production, which means that either the price rises or the material becomes unavailable. I believe, too, that we have a substantial production deficit, much of which could be made up by returning Kazatomprom and Cameco hot shut production back into production. If you believe what Cameco and Kazatomprom say, and I realize that's an important caveat, believing what management say, but if you believe what they say, they won't return that product to production unless they can sign sufficient long-term contracts to generate a reasonable rate of return for their shareholders. In terms of the market that we as Sprott see in uranium, having bought 55 million pounds of it in the last few years, is a market where total global demand now exceeds total global demand before Fukushima, which is to say the pace of Chinese new builds has overcome the pace of shutdowns, including the Japanese shutdown. And two other things to consider. The first is that public opinion in Japan has now swung in favor of nuclear from being anti-nuclear, which means that as the pace of Japanese restarts accelerates, as much as 10 million pounds a year of new fuel demand emerges from reactors that don't have to be built, but are rather already built. The second factor that many people ignore, but I don't, is that in terms of the supply overhead, 55 million pounds of that went to supply heaven because you guys gave us money, and in the Sprott Physical Uranium Trust, we bought it. That uranium doesn't get used, it doesn't get sold. That is overhang, supply that went to supply heaven. So my own belief is that the uranium market is out of balance, but on the bull side rather than the bear side. I would caution you, however, that that's an opinion, first of all. And if you look at the price of uranium equities, the price of uranium equities assumes a premium to the current spot price of $50 a pound, which is to say, yes, the spot market, and more importantly, the term market goes up, but the prices of the stocks on a net present value are already anticipating that. That doesn't mean that if the price goes up, that momentum, that sentiment won't drive the uranium shares up. Many people remember the last bull market with a certain fondness, myself included. But you need to know from a fundamental point of view that the fact that the uranium price goes up doesn't necessarily mean that the values of some of the small uranium companies need to go up too.
Fabi, you've been invested in uranium for a very long time, and as you mentioned, it makes up the majority of your portfolio, so obviously you believe this bull run still has legs, right?
Yes. When we go back and look at just the spot price, with the caveat that that's not the whole market, that's just a portion of it, and we look at the last bull market, whenever the incident happened up in Saskatchewan. There was a mine flooding, and all of a sudden everybody ran to the spot market. Price went from whatever, I wasn't around, to about $140 per pound. I think that wouldn't be shocking if it happened today with a squeeze, because we're starting a new contracting cycle now. And so speaking strictly about the commodity itself, with a spot price at around $50, and a corrected price of $201, that would be today's prices compared to the 140 in 2007. I think we have a long ways to go when we're speaking about the commodity itself. But just like Rick said, I do believe that there are a lot of companies that on an NPV basis are counting on 70, 75, sometimes even $80+ uranium. And that doesn't really make them cheap, in my opinion. So you got to be really careful who you're betting on, company-wise. But commodity-wise, we have a long ways to run, I believe.
Right, so there's a lot of options for investing at different stages of development, from lowest risk up to higher risk on the spectrum. Obviously, in the lower risk, you've got ETFs like the Sprott Physical Uranium Trust, URNM, which holds a basket of miners, and then you go up to exploration, development, and the two big producers that are publicly traded. So my question is, where right now among those stages of development do you think it's best for investors to be deploying capital, and which offers the most attractive returns? I'll start with you there, Rick. I'm going to switch it around.
Rick, well, that's interesting. You ask a question that I have a self-interest in. If you think the price of uranium is going to go up, the place you start is by buying uranium. Mercifully for us at Sprott, you can't buy it and put it in your basement, or at least it's not recommended. So the place that you start, I think, is the Sprott Physical Uranium Trust. Note the conflict of interest. If you buy it, I collect fees, which I think is a wonderful thing. For those of you who aren't willing to do a whole bunch of work, the way that you participate in the uranium equities market is the ETF, conveniently offered up by Sprott. For those of you who want to get a little bit granular, my own belief is that the larger producers offer better relative value than the juniors in today's market, which is to say, if I were not willing to invest the time and attention that I'm willing to invest, I would buy Cameco and Kazatomprom, probably in reverse order. Kazatomprom is the finest uranium producer in the world. However, it operates in a country that most people can't pronounce, and those who can pronounce don't like. If you're going to come down to the juniors, which is where most of the fun is, be prepared to do the work. There are a bunch of companies out there that purport to be uranium that are actually looking for uranium. They don't have any. If the price of something that you don't have any of goes up, it shouldn't necessarily have any impact on your share value. For most of you, those of you who have lives, who want to participate in the beta in the uranium market and also benefit your old friend Rick, by all means buy the Sprott Physical Uranium Trust and buy the Sprott Uranium ETF. For the rest of you, which ones you should buy really depends on your tolerance for risk and, importantly, how much work you want to do. If you're going to go in the juniors, prepare to roll up your sleeves, prepare for volatility, prepare to do some work.
Great. And Nick, could I get your thoughts on that?
Sure. I have similar thoughts about the ETFs. I've recommended the Sprott Uranium ETF in my macro sort of long-term monthly letter. And We've also been in Cameco, though we did sell early last year to take profits off the table. And I like sort of those mid-level producers, or those production ready, right? The UECs of the world, the Denisons of the world, the Energy Fuels of the world. I guess particularly those last two, because they give you a bit of diversification in that Energy Fuels also owns the mill in North America, and Denison has a stake in a mill and is working on some new extraction technology as well. And then when I go further down the chain, I tend to do that first via private placement, which I know not everybody can do, but sometimes the terms of the private placement via either the discount to market or the warrants that you're afforded with those deals can smooth out some of the volatility and take some of the risk out of it for you and give you some optionality. So that's typically how I first approach those smaller exploration companies. And then I guess, obviously you have to do the work like Rick said, but look at the model. I like companies who don't necessarily have to explore all on their own dime, sort of, prospect generators or hybrid prospect generator models where they can benefit from the upside of a discovery without necessarily having to use all their own capital to do that exploration.
Great. And Warren, where do you think is the best place to deploy capital in the uranium space? Yes, absolutely.
We haven't talked at all about enrichment or conversion, which is emerging as quite the pinch point. If you look at companies that have a little bit of skin in that game, like one I watch, though I don't own, is Silex, has been performing quite well. So it doesn't have to necessarily be uranium exploration and extraction. It can be in different parts of the uranium cycle as well.
Right.
I was once like you. 7 years ago, I bought NextGen, and I bought 10% of the company. It's now a $3 billion company, so I made a lot of money on it. I talked to a very smart friend of mine who said, Warren, I said, I'm so bullish on uranium. You ever see the supply-demand fundamentals? They're using more than they're consuming. And he says, Warren, there's tons of uranium out there. Don't get too excited. I said, no, come on. You got to think this. I had 1,000 reasons, many of the reasons that are still used today. He goes, Warren, there's 1 billion pounds of uranium just sitting out there making up this deficit. Happens every year. So over the past 7 years, my friend was exactly right. 7 years at 50 million pounds a year deficit. So 350 million pounds of uranium has hit the market, and nobody knows where it's come from. So is this a market I want to bet a whole bunch of money on the price of uranium? Not really. And when you add what Rick's done with the 50 plus million pounds, plus what Yellowcake has done, you're looking at another 70 million pounds. That's 420 million pounds has come out of the market to satisfy, come from somewhere to satisfy all this demand. When I look at how much money I made on NextGen, I remember when I first got in, it was around $20, $25 a pound. It dropped to a low of 17, then it went to 50, where it is today. And am I impressed with the returns I've earned in NextGen because of that move? Because if you took the price of gold, you say it's going to triple, you'd think you'd make extraordinary amounts of money. I'm not impressed with the amount of money I've made in it. Take a look at the players of today. You look at Cameco. Well, Cameco has a severe production problem coming down because they've got Cigar Lake's coming out of production. McArthur River, despite what they say, is an old, tired old mine. I know engineers that have worked on the property, have built the mine. It's tired and it's old. Just look at how long it's been around. They mine the easy stuff first. So when they have an opportunity to buy the next 30 million pound a year producer, which is NextGen, what do? They don't buy it. They get vertically integrated by buying Westinghouse. So Cameco could run out there and say we're bullish on uranium, but when they have a chance to buy uranium, in fact, one of the finest uranium mines in the world, they don't do it. Instead, they get vertically integrated by buying Westinghouse. Like, it just boggles the mind. And then when you factor in, like I said, you cannot build nuclear power plants overnight. So you're looking at low single-digit growth in demand. So what's going to happen in this market going forward? Well, the fundamentals, we have a whole bunch of uranium out there that hits the market periodically to fill this gap. We've got a slow growth rate on demand, but what do we have going for us? We have a lot of people like you that are super keen and super interested in speculating in uranium, which may drive the price higher. And now that we have a vehicle like Sprott's, excellent vehicle, if you get some billion-dollar hedge fund throwing $2 billion, $3 billion at that, it'll prove me totally wrong. We'll have a big run in it. There'll be back to, instead of having 10 juniors in the uranium space, we'll have back up to 400. And then when it collapses at the end of it, just make sure you guys are not owning those 400 piece of junk uranium companies, because that's exactly what happened last cycle. Last cycle, when it spiked, everybody talked so great about it. I made money on it. A bunch of people at this table, I'm sure, did. But guess what? It was a zero-sum game. It just ran up and crashed right back down again. And a lot of people were left holding the bag. And unfortunately, there were a lot of retail investors holding the bag. So just a little note of caution there from me.
Great, I love it. Fabi, what about yourself? Where are you deploying capital in the uranium space these days?
I like the stuff that these big guys can't play in, the kiddie pool, companies that are so small that if VRIC tries to buy a tiny, tiny, tiny little bit of it, it would just spike up. So he doesn't, I think. So I like the companies that have a resource in the ground, usually, and that resource is currently uneconomic, or it's historical, or it's just a new company that's in a region that used to be economic, say back in the 60s, 70s. So I like the US a lot. And I like to know that I can put a number to what I think has value, right? So I need to be able to look at the company and say, okay, I think I understand what you have here. I think I understand pounds and what it would cost to get it out of the ground. And I think that the market isn't giving you enough credit, either because the market doesn't know that you exist yet, or because this is all historical and can't officially be claimed as a resource. I like those type of plays. So I also represent a few companies marketing-wise, and I like those companies as well, but then I am biased and take everything with a grain of salt, not just what people say that they like, but what they actually own. I think that matters more.
Right. Now, Warren did mention in the last bull cycle how, the price went parabolic and then fell quite rapidly. So the next question I have is about exiting positions. This is a question I see come up a lot online. People are wondering when it is best to sell positions. So how do you know when it's time to cash out? And are there any strategies or ideas you could maybe share that could help investors know how to get out of the market when it's time?
I feel real smart about the way I bought the last cycle. And if you saw the way I sold, you probably wouldn't be listening to me. I remember thinking in 1998 with uranium at $8 a pound, you know what? This is a market that could go to 30. It did, on its way to 150. I thought that the price that I thought the uranium might go to, which is to say the avoided cost of production, was a valid statistic. It turned out there were 7 people in the world who cared about that. I sold way too early. Now, as Warren points out, selling way too early ended up being a good decision, but it didn't feel so smart at the time. If I had to do it again, I'd make the same mistake. I believe that you buy a commodity when you think it's selling for less than it's worth. I think that you buy a company when the delta between what it's worth and what it's selling for is in your favor. And I think, particularly in a bull market where you begin to feel smart, that you look for things to sell. All commodities businesses are cyclical. You always have to be a contrarian. But uranium is hyper-cyclical. And uranium has one more problem. I could be way right. I could be way understated. If you had a repeat of Chernobyl or 3 Mile Island or Fukushima, despite the fact that I was right in the 100-year term, I'd be wrong in the 20-year term, and the stocks would be knocked off by 75%. So if you don't have the stomach for volatility and things like that, you need to make your exit quick. What happens, unfortunately, is that human beings, as the price of something goes up, that price action validates the narrative. When in 1998 the price of uranium was at $8 a pound, I could and did sit at the pulpit, meaning the podium, and pound it and say, if you don't buy this stuff, there's no point in listening to me, at which point some people would get up and leave. When the price of uranium had gone to 40, which is to say when the narrative had been fulfilled by the price, people were fascinated. When the price didn't have to go up anymore, people wanted to own it. It's an odd circumstance. You see it in gold, you see it in oil, you see it in everything except maybe coal. So I would say when you start to feel smart, or when you start to see lots of company in the trade, when you see as Warren observed, the price of entrance in the market go from 5, which is the number that there were in that market at the beginning, to 500, which is the number that there were at the end, shades of lithium, you need to think about making an exit. At least get your bait back. At least sell enough that you've recaptured all your capital and paid the capital gains tax so that the position that's left over is really, truly paid for.
Great. And Nick, any thoughts to add to that on exiting positions?
Sure. I think you can sell incrementally. Let me take a step back. I guess I think you have your core positions, you know, your trusts, your physical, and your ETFs, as we spoke about. And you can sort of trade around those as sentiment ebbs and flows in these hyper cycles that Rick is talking about, which we've done in the letter. And then don't be afraid to sell positions and re-enter, right? So I told you earlier, we sold Cameco last year. We also bought and sold Denison last year. And then we re-entered like Uranium Royalty Corp at the tail end of 2022. So that's not necessarily being a trader. You know, these are sometimes 3, 4, 5 month hold times, but you can take positions and exit them. So you know, don't get married to your positions. They're not girlfriends or wives. They're just ticker symbols. The other thing is what I was mentioning about private placements, and Rick alluded to this a little bit. One of my favorite strategies is selling enough to get my cost down to 0 and either still have some remaining of the original position or have optional upside in the form of warrants. So those are a couple of strategies I use to keep my cost basis down and to spread out my risk a little bit. Selling is the hardest part, and it's a very individual decision as well, and it's one of the hardest things to do. So don't be afraid to take gains when they're on the table, and unfortunately sizing those gains as far as what's appropriate for each individual in this room is difficult for me to do. So what I write about is what I'm doing with my own capital, and if you went back and read the issues and looked at the portfolio, you would see what I'm talking about be reflected.
Thank you. And Warren, anything to add to that?
Yeah. First of all, I applaud you for being so brave and coming into this market, especially trying to trade the juniors. I used to trade the juniors too, and one thing I didn't mention earlier was if you ever think there's a shortage of uranium, over the past month or so, I have been shown deals with well in excess of 1 billion pounds of uranium that will be, so there's lots of uranium out there. But anyways, if you guys are still bent on and speculating in the uranium market, I wish you luck. My general views on selling would be whenever I feel good, that this is really good. I feel really, whenever I feel smart, whenever I feel that, hey, this is easy, I find those are really good markers to start letting some stock go. The next one would be, Rick, I'm not sure how many juniors we have right now. How are we? We're about 75, 60, do you think? What would your estimate be?
In my declining years, I'm less involved in the true penny dreadful. So the honest answer is I don't know. I think when we did the uranium boot camp, I think we counted 76 companies that purported to be in the uranium business, maybe 15 of which we thought were viable.
Okay, so just to give you a sense of, just based on my experience and having vaporized a bunch of money in these penny dreadfuls going to 0 when the price of uranium collapsed, I hope that doesn't happen to you. Perhaps what we could do, a nice benchmark might be, there was rumored to be 400 to 600 juniors by the end of the last baloney uranium hype, right? So if we're at 75 now, perhaps keep a list of all the uranium juniors, and when it hits 150, you may want to think, well, now might be a time to let a little bit go. When it hits 200, if you own anything after 200 uranium juniors, because trust me, the world does not need 200 uranium juniors.
Great. And Fabi, what about yourself?
I don't remember the question, but I think the number for current uranium juniors is just over 100. Thank you very much. So what is the question again?
Exiting positions. How do you approach that?
I am extremely bad at exiting positions. All of these guys can do it better than me, but to cover my multitude of sins, I try to get really, really good entry points. So you see a stock chart price when it flatlines, when it looks like the patient is dead, I like those plays, right? Because anything can happen. One person wants to get into the stock, they come after you, boom, goes up 10%. And so I make sure that my entry price is really, really good. If it doesn't look cheap, either on the chart or from a company perspective, from value, going back to it, again, I need to look at some numbers. I need to have something to hold on to and not just the hype. Then I won't buy it. And so if I'm entering a position, it's because I believe it's cheap. Because I know that when the time comes for me to sell it, I'm not going to nail the top. And in fact, I might be a little bit late. I might be too early. I don't know. I can't predict that. Don't have a crystal ball. So get your entries right.
Great. And let's move on to some stock picks now, because I think I'd be remiss to not have that in a panel about making money on uranium. So maybe we could focus on companies that you're seeing an opportunity in right now as we sit here today. So maybe someone new to the space could use that information and do some due diligence themselves. So Rick, is there any companies at the moment that you've got your eye on?
Well, the finest uranium producer in the world, bar none, is Kazatomprom. The lowest cost, highest volume, most profitable, and I would argue the most well-run uranium company on the planet. Many people don't want to own Kazatomprom because they can't pronounce it, they can't spell it, they don't know where Kazakhstan is, and if they do, they don't want to be there. On the subject of political risk, I've had money stolen from me in every jurisdiction on the planet. There's no such thing as a good jurisdiction. There's some that are less good. So I own Kazatomprom because I'd rather take political risk than technical risk. I share some of Warren's skepticism around Cameco, although I have a higher opinion of their producing and non-producing assets. I'm concerned with Cameco buying an engineering business because I wonder what it is that they happen to know about engineering. I'm always nervous about a company that tries to do 2 things or 3 things or 4 things right, rather than doing 1 thing right. Maybe they'll do it, maybe they won't. My background is as a resource analyst. I'm not a process and technology analyst. So I have no idea if they overpaid or underpaid or if they can operate that. Coming down the quality trail a little bit, I hate giving advice because I don't know who I'm giving advice to. If you are going to be in the non-producer space, if you can't do net present value calculations with some measure of efficiency, off of easy-to-obtain documentation, you have to work awfully hard. And most of you that I know want me to do the work for you, and the work changes. So for those of you who want to be attracted to the uranium space, I personally would go for the beta and buy the ETF. For those of you who want to buy individual stocks, I suggest that you come to the Uranium Investors Bootcamp this year and learn how for $99 from me.
And Nick, any companies you're currently invested in or watching that you think present an attractive opportunity?
Sure. I think we've already mentioned the ETFs are a good base way to enter. I keep a core position in URNM, and I think that's a great place to start. I don't own a lot of uranium companies, so I could probably count them all on one hand, and maybe I'll just run through a couple of them, particularly those that are at the show. I became a shareholder of Encore Energy by way of my financing earlier on of a company that became Azarga, which was then taken out by Encore Energy. So I have sold some shares. I've sold some shares in the letter, and I continue to own Encore for its upside, particularly now that it's listed on a big board. I've been a long-term financer and supporter of a company called Sky Harbor Resources, which employs a hybrid prospect generator model. Has small resources on a couple of projects. We'll drill something like 25 or 30,000 meters this year, both on its own self-funded projects and through partner-funded projects. I think it's really well run. I think they're great stewards of capital. What else do I own? I own Denison. I think Denison is a great, sort of mid-tier speculation. It gives you access to multiple facets of the uranium business. And I've recently begun scaling into Uranium Royalty Corp because it's a little bit different business model. Again, gives you that optionality, and because they were trading damn well close to cash in December, and so continue to be relatively cheap. So I don't own many more uranium companies than that. I own a tiny bit of Kraken. just for some U.S. highly speculative exposure, and that would probably exhaust my entire list of uranium equities that I own.
Thank you. Warren, and anything to add? Or should people just not invest in any uranium company right now? What's your view?
Well, I'm here for the contrarian of you. I've been an investor in NextGen for a long time. I've been moving out of NextGen to move into a new nickel name I'm involved in because I think the upside's way better than what's left in NextGen. But NextGen, frankly, for somebody who's patient, wants to wait out the build cycle for their situation, it's extraordinary. The good thing about it is that if the price of uranium stays where it is, you're going to make a bunch of money. If the price of uranium goes down a bit, you're going to make a bunch of money. But you won't make as much money as you'll hear your friends talking about some of these moose pasture uranium companies. But if you want to actually invest in something real and it's going to make you some money over the next number of years, NextGen will do that. And if you want to speculate in uranium, the Sprott ETF. So I think those are the two ways you can play it. You're not going to lose your shirt on it. And then, but I know a few of you guys, you just can't help it. You have to invest in some of these moose pasture uranium companies, and they'll be fun. They'll go up 10 times and then go to zero. But, you can have some fun with those too if you want. Just realize the risk.
Great. And Fabi?
Well, first of all, I'm really happy that everybody has mentioned all the great companies. So I can mention all the tiny companies that might actually give better returns. So I am very biased because I have a working relationship with all of these companies that I will mention right now, because since Rick pitched, I am going to pitch as well. So I'm on the board of a brand new IPO'd company called Rush Uranium, historical resources in Wyoming, best U.S. jurisdiction. There's also Strathmore, right close to us. Strathmore plus Uranium is also another company, U.S.-based, a very small market share, 3 very interesting projects. They're also a client of mine. And I'm also going to mention Myriad Uranium, which has a lot of really interesting ground in Niger, which is, believe it or not, a really good jurisdiction for mining uranium. Global Atomic is there, and they're just about to, start building their final phase and getting into production maybe end of this year, maybe beginning of next year. We're not quite sure yet. And Myriad Uranium has some interesting ground right up against Immoraran, which is the soon-to-be mine you've never heard of. But if you can spell Immoraran, it's got, I think, 380 million pounds in Niger. Nobody's ever heard of it because it's owned by a private-ish company, not a public company. It's kind of half private, half government-owned. And so these are some of the companies that I really like, that I am totally biased about, and you shouldn't really listen to what I just said because I have vested interest in all of them.
Great. Well, thank you very much, everybody, for attending this. Thanks to all the great panelists. Really appreciate it. And you guys have a great conference.